Hello everyone, you're welcome to Young Investors Network series on financial literacy, and today we are concluding our analysis on Total Ghana. Our previous videos focused on the trend analysis of their statement of financial position and then the income statement element. We looked at their growth rates, and then we've also looked at some ratios, looking at the liquidity ratios of the company. We looked at the company's profitability ratios, or we use profitability ratios to assess the performance of the company. We also looked at the company's leverage. Okay, so today, just as we said the other time, we are going to focus on two main ratios, the market ratios and then the asset utilization ratios. So sit back, relax, and enjoy the video. So let's start with the book value per share, or the market ratios. It has already been estimated here, so as always we need to clear them all. Okay, so we cleared all these and then we take, okay, so there we have it. So let's delete them, except then the share returns to must also go. Good, leaving the share price. All right, so let's start with the book value per share. When you say book value per share, it basically represents the total equity of the firm as against the total amount of shares that the company has, that is outstanding shares. So let's look at that calculation as usual from 2014 to 2018. So let's go straight to the statement of financial position and look at 2014 total equity. So 2014 total equity is what we have here, divided by the total amount of outstanding shares in 2014. There we have it. Okay, so that is it for the book value per share for 2014. Now the market to book value per share looks at the market price per share and the book value per share, comparing the two to see. So let's look at, this is the, I have already taken out the share price from 2014 through to 2018. So this is the market price for 2014, and then we already have the book value per share. Now the earnings yield, which explains how much investors are going to receive in earnings of every cedi that they invest in the company. We will need the earnings per share. So we have earnings per share over here, so we need to estimate the earnings per share, which is the amount of earnings that is attributed to the shareholders or shareholders of the company at the end of every period. That is their profit after tax over the total number of outstanding shares. So we have 2014 profit after tax is what we have here, divided by the total amount of outstanding shares. So that's what we have here. So this will help us to be able to calculate our earnings yield, which is the earnings per share all over the outstanding, the market price of the shares, times 100. Now we have the PE ratio, that is the price earnings ratio, okay, which is also, or which is telling us how much investors are willing to pay for the earnings that or for every earnings that the company is generating. So we will need the price per share all over the earnings per share, which we have here, that is a PE ratio. So there we have it, 22.04. Our next ratio will be the dividend payout ratio. Dividend payout ratio represent the amount of dividend that the company is paying out of their profit after tax. So we have you can use the amount of dividend that the company paid divided by the total number of profit after tax, or you can use the dividend per share over the earnings per share. So dividend per share, okay, so we haven't estimated the dividend per share over here, divided by the earnings per share. So earnings per share is here. Now let's work on our dividend per share. So the dividend per share represents how much dividend each shareholder is to receive. So we have the total amount of dividend paid in 2014 amount of dividend paid in 2014, let's see here, divided by the amount of outstanding shares. Okay, so this gives us a dividend payout ratio of 63.45%. Now let's look at the dividend yield. Okay, so we have the dividend per share here, just like we did for the earnings yield. It's going to be the dividend per share all over the market price of the company. Now the share returns, we will do that later on. Now let's look at the book to market ratio. Okay, so the book to market ratio. So the book, okay, let's go to the market cap. So market cap is the same as, or is known as the market capitalization, all right, which represent the total number of shares outstanding multiplied by the share price for that particular period. So we have total number of shares outstanding in 2014 times the share price in 2014. So as at 2014, that was the market price. Now let's look at the share returns. Okay, so the share returns we will need. So in this case, we want to look at the returns that shareholders of the company are going to receive if they had, or if you had invested in the company from 2014, 15, 16, 17 and 18. So this is going to be the year-on-year share return. So we will look at the current year, which is 2014, then we will take out the previous year, which is 2013. Okay, then we close brackets. Because shareholders receive two main components, that is the capital gains and then, or capital loss, and then the dividend that they are going to receive, or dividend by the company, we have to add the dividend per share in addition. Okay, so we have added our dividend per share. Okay, so we divide all by the previous closing price. So there we have it. So this represents the amount of returns that shareholders, if you had bought the shares in 2014, this could have been the returns that you could have gained from the previous year. So now let's look at, let's drag them here and look at it for the good, and then you look at the dividend. Okay, and then we have our good share returns. All right, so now let's chart and then look at how we are going to do the explanation. So before, let's look at book value per share, market to book value. Yes, let's look at the book value per share, market to book value, and then add the PE ratio. Okay, so we have the book value per share, market to book value, then let's add the PE ratio to it. So these three for now. Okay, yes, so let's insert our chart and see how the company has performed throughout the years that we are reviewing. So we have data label, so we change our chart, select data. So we have the first one being the book value per share, we have the subsequent, we have the market to book, that is a comparison of the market price to the book value of the, then we have the PE ratio. Okay, so let's see. So this will represent the market ratios. Okay, so let's take this out and then bring it to our blank sheet, and then also change the chart in question. So let's change, go for this, and then see if we can get a better. Good. So I think we can use this to do the good. So the PE ratio of the company, that is the first line that we are seeing here, from 2014 through to 2016, we can tell that the company's PE ratio has been on the decline from 22.04 through to 7.55 as at 2018. Okay, so as at 2018. Now, like I explained, how much investors are willing to pay for the company's earnings, that is the PE ratio that we are seeing here. So we can see that it has been on the decline, with the lowest being 2016, where the PE ratio stood at 5.79, and then in 2018 it is 7.55%. There are a whole lot of explanations about the PE ratio. Some say, or some analysts say, that a high PE ratio represents a growth stock, and then a low PE ratio represents a value stock. Now, those who say that a high PE ratio go for a or represent a growth stock also say that the stock is overvalued. Okay, in the sense that it is overvalued. Now, it is trading more than, or on the market, the value of the stock on the market is higher than its actual worth. All right, now if it is undervalued or underpriced, meaning that it is a value stock, okay, meaning that it is trading less than its actual price on the books. All right, so depending on how you may want to interpret it and how you may want to invest in the company, you may also look at the company's PE ratio throughout the years, or the current, that is the up-to-date PE ratio of the company. Now let's look at the market. Let's look at the book value per share before we come to the market. Now the book value per share represents the historical total equity all over the outstanding shares of the company. Because the total equity is historical in nature, that is, it represents the past figures. Okay, you would want to know how much shareholders are actually worth in the books of the company. Okay, so we can see that from 2014 through to 2018, it has been on the increase from 1 cedi or 1.03 to 1.84. all right, now if you look at the market to book value, which is a comparison where this represents the historical, the market to book comes in to reflect the current, that is on the market, how much is the stock actually worth. So it has also been on the decline from 2014 through to 2018, so from 5.94 to 1.85, with the lowest being 1.44 in 2016. Now pundits say that a less market price, or the market to book value than, or if the market to book value of the stock is less than the book value per share, then it means that the market does not value the stock, okay, as highly as it used to be. So if you look at the current or the 2018, its book market to book value, you realize that it has been on the decline. Others consider this to be a stock that is undervalued, hence they would want to buy more now because they know that it is worth more than it is actually being traded on the market. Okay, so this has been the market, some of the market ratios of Total Ghana. Now let's look at other ratios. So we will look at the earnings per share, and then the dividend per share, and then also add the share prices to it. So from 2014 we have earnings per share here, we have the share price here, we have the dividend per share also here. So let's insert our chart. Okay, so let's go for this and see how it's going to look like. So we insert our data, select data. Okay, so we have the first one being the earnings per share. Okay, the second one being the price, that's the market price of the stock, and then the last one being the dividend per share. So let's go for it and rename it as market ratios. So we have market ratios. Okay, so now let's cut it to our blank sheet and see how it's looking at. Okay, so we have zoom in. Let's change the design to this. Okay, now let's change the chart and see if it will be not nice. Okay, let's go for a bar chart. Not so nice as well. Well, let's change it back to the line and manage it with this. Okay, not so clear, but let's manage it this way. So for per what we are seeing here, oh, I have to change the series names so that it will be visible enough for us to see. Okay, I did that. So let's go back and then paste it here. Let's see. Okay, so it looks like I didn't do it for all of them. Just left it one more. Select data. So the last series, which represents the dividend per share. Yes, so we have dividend per share over there. Okay, so now we can take it off and then okay, so there we have it. So there we have it here. Let's change the design. Okay, so let's stick to this. Not so clear, but we will manage, especially now that we're seeing the share price. Okay, so this has been the company's earnings per share, share price, and then the dividend per share throughout 2014 and then 2018. So the earnings per share, like I said, it is how much investors are receiving or shareholders are receiving per the amount of shares that they have out of the total profits or the net profit of the company. So in 2014, you realize that the company's earnings per share was 0.28 or 28 pesos. And throughout the years under review, we've seen that it has been on the increase, with 2018 being 0.45 or 45 pesos. Okay, now let's rename this and then bring the Ghana cedi sign here. Okay, so there we have it. So everybody will know that this is in cedis. Now looking at the share price throughout the years from 2014, where it was trading around 6.1 or 6 cedis 10 pesos, and as at 2018 it was trading at 3 cedis 40 pesos. That is about half the price it was trading in 2014, with the least or the lowest price being 2016, where it traded around 1 cedi 98 pesos. Well, there are a whole lot of factors that may have caused this, because demand and supply really causes or changes the price of stock markets. You may have to look out for a lot of explanation as to why the share price declined to 1 cedi 98 pesos. However, we can see that from 2017 to 2018, sorry, it has picked up, which is currently trading, or 2018 it was trading around 3.4 or 3 cedis 40 pesos. Now the dividend per share represents how much dividends investors are willing to, or the investors are going to receive at the end of the period. So the company paid this amount of dividend. How much are you as an investor going to receive per share of the company that you have? That is what we have here. So in 2014 we are seeing a dividend per share of 18 pesos, and in 2018 we are seeing a dividend per share of 13 pesos. That is a very, very, very low, or it has declined looking at the previous amount of dividend per share that the company has had. So in 2014, 18 pesos, 19 in 2015, and then in 2016 it was 21 pesos, and in 2008, 17 it declined to 18 pesos. 2018 it has declined further to 13 pesos. So this has become, or this is the company's earnings per share, the share price, and then the dividend per share. Now let's look at other analysis that we can do for Total Ghana. Now we've looked at all the currency. Now let's look at the ratios. So we are going to start with the earnings yield and then the dividend yield. So earnings yield is what we have here. Then we have the dividend yield, what we have here. Then we have the share returns, what we have here. Okay, so let's insert our charts. So let's insert our charts. Good, there we have it. Now let's showcase our labels. So we have data labels here, and then rename the series. So the first series is the earnings yield. Okay, then we have the second one being the dividend yield. Okay, and then we have the last one being the share returns. Okay, so there we have it. There we have it. So we delete this. Okay, and then we clear and rename it as market ratios. Okay, these are in percentages, so we don't need any currency sign, the Ghana cedi. So let's insert it here. Okay, expand it. Okay, then change the design to this. Okay, now let's see if we can get a very nice chart. This. Okay, let's manage with this. Not so clear, not so clear, but I bet you can see them from the labels here. Now let's look at the share returns for Total Ghana from 2014 through to 2018. It must be noted that this represents the dividend component and then the capital, the dividend gains and then the capital gains component. All right, as a shareholder of a company, you are entitled to dividend. That is, if the company declares dividend, that is a cash amount or cash dividend that comes to you. In addition to that, as the market, that is demand and supply, affects the share price on the market, it may be appreciating or falling. That is, it will also fall down. So it can go up and it can also come down, just like we saw for the share price. So these two, if you buy it low and then now the share price is high, you realize that you gain out of that amount 8% plus the dividend that the company gave to you is how much you are actually earning as a shareholder of the company. So looking at shareholders of Total Ghana for 2014, you can see that they've earned, or they had a return of 24.06% of share return. That is the year on year from 2013 to 2014. Now if you look at that of 2015, there was a negative return of 13.3%, with the highest being, or the highest loss being 2016, from negative 13.3 to negative 57.17%. Well, we have already seen that in 2016 the share price declined from 5 cedis to 1 cedi 87 pesos. Okay, and in 2017 it went up from 1 cedi 87 pesos to 3 cedis, explaining the share returns that we have here, that is 87.27%. And in 2018 there was a share return of about 0.09%. that is a year-on-year component. Now if you look at the dividend yield, as I explained earlier on, which represents how much you are generating in dividend per every cedi that you invest in the company. Okay, so dividend yield in 2014, realize that it is 2.88%, and it has been on the increase, though stable. So in 2014 we are seeing 2.88%, 3.7% in 2015, 10.37% in 2016, and in 2017 it declined to 5.04%, and in 2018 it has declined further to 9.92%. Well, we have seen that the dividend yield is influenced by the dividend per share and then the price per share. Okay, so the more dividend that the company pays, I presume, that will have an effect on it. Then the higher the share price of the company, that will also have a great impact on the company's dividend yield. Now let's look at its closest factor or variable, that is the earnings yield, which is also the same explanation. How much earnings are you going to generate, or how much are you going to generate from the company's earnings if you invest a cedi on the company, or 1 cedi on the company, or in the company. Okay, so if you invest 1 cedi in the company, how much are you going to earn or generate from the company's earnings? So in 2014 we are seeing the earnings yield of 4.54%, and throughout the years it has been on the increase, with the highest being 2016, where they had earnings yield of 17.28%, and in 2017 it declined to 9.17%, and 2018 it stood at 13.24%. So this has been the market ratios for Total Ghana. Now let's look at the other ratios that are left to be dealt with. So we've looked at the book value per share, market to book value, we've looked at it. Earnings yield we have, PE ratio or the price earnings ratio we have, the earnings per share we have, the dividend payout ratio we have, the dividend payout ratio we have, the dividend yield. Okay, we haven't looked at the dividend payout ratio, so let's add, or let's work on the dividend payout ratio. So dividend payout ratio, like I said, this represents the amount of dividend out of their PAT, that is the profit after tax that the company paid to investors. So per what we are seeing here, it looks like it has been on the decline from 2016 through to 2018. That is the amount of dividend that the company has been paying, with the highest. Okay, so let's rename it. So this will be the dividend payout ratio. Okay, so there we have it. So let's take it to our blank sheet and then work on it. So we have the dividend payout ratio. Now let's see how it works. Okay, so from 2014 through to 2018, we can tell that the company's dividend payout ratio has been on a decline from 63.45% in 2014 to 29.59% in 2018, telling us that over the year, the 5-year period, the amount of dividend that the company has been paying to its shareholders has been declining. All right, with the highest being 2014 and then 2016. Yes, where they paid about 60% of their PAT as dividend. Okay, now our next chart will be on, or our next analysis will be on the market cap. That is the market capitalization of the company as at the period that we have reviewed. So from 2014 through to 2018, what has been the market cap of the company? And like I said, the market cap represents the value of the firm on the market, the true value of the firm on the market. So let's see how the company is actually valued on the market. So this is influenced by the share price, mostly the share price, and then the total number of outstanding shares, but mostly it is the share price. So market cap. Yes, so we have the market cap. So let's take it to our blank sheet and then work on it. Okay, so there we have it. So the market cap for Total Ghana. Alright, so from 2014 through to 2018, we've realized that the market cap of Total, that is the value of Total, has declined from 682 million Ghana cedis to 380 million Ghana cedis. Well, we are seeing some points here, but it doesn't really change anything, because in 2014 you realize that the share price was around 6 cedis. As at 2018, the share price was around 3 cedis 40 pesos, with the lowest being 2016, where it was trading around 1 cedi 20 pesos or 1 cedi 80 pesos. So this has become the market cap, or the true value of Total Ghana on the Ghana Stock Exchange. Now let's look at one interesting aspect of this whole ratio, the market ratios. We realize that everything that we are doing is from 2014 through to 2018. Looking at their share price, the share prices have had a significant impact on the company. Now, as at now, July 2019, that this analysis or this video is being recorded, the share price of Total Ghana is 4 Ghana cedis. Okay, so it means that the figures here, if you want the current on the true performance of Total Ghana, then you should use the current market price, which is 4 cedis. Now, if you look at the book value per share, the market to book value, the current market to book value as at 2018 was 1 cedi 85 pesos. The earnings yield 13.24%. And then we are seeing a PE ratio of 7.55. We are seeing earnings per share of, okay, for earnings per share it won't change, dividend payout ratio won't change, earnings yield of 3.92%, and then a market cap of 380 million Ghana cedis. However, if we are to change the market price from 2018's figure to the current price, which is 4.00, this is what we are seeing. We are seeing a market cap of Total to be 447 million Ghana cedis. That is the true value of Total Ghana. Now we are seeing the share returns. So from 2017 through to 2018 July, we are seeing a share return of 17.09%. Now we are also seeing a dividend yield of 3.33%. that is up from the previous amount of about 2 or 1. Then we are seeing, okay, so let's see the, okay, so we are seeing the earnings yield to be 11.25%, and then the market to book ratio, or the market to book value, we are seeing 2.17%, as against the previous figures that we saw over there. So viewers, this has been the market ratios that we have analyzed for Total Ghana. In our next video, we are going to do that of the asset utilization, focusing solely on the asset utilization of the company, how the company has efficiently utilized its assets. This has been Prosper Apanye of Young Investors Network, and today our focus has been on Total Ghana, using market ratios to analyze their performance. Please subscribe to our page, like, share, and then comment. Thank you.